Southwest Airlines is set to report earnings tomorrow. The stock is up 11% over the past year, but if we zoom out, it's still down about 20% over the past 5 years. In this video, we're going to find out whether Southwest Airlines is a buy today. We'll take a look at the company's fundamentals and run a discounted cash flow model to estimate the intrinsic value and potential future returns. Let's start with their financials. Revenue had been growing steadily until 2020, when the pandemic hit and caused a sharp decline. Since then, Southwest has recovered nicely, with current annual revenue around $27 billion. Analysts expect that momentum to continue, forecasting $28.4 billion in 2025 and grow up to $36 billion by 2029. However, profits haven't bounced back the same way. Before 2020, Southwest earned around $2 billion a year, but now they're making roughly $400 million in net income. Margins have also taken a big hit. Gross margin has dropped from 36% to 21% over the past decade, and net profit margin has fallen from 11% to just 1.4%. Analysts do expect profitability to recover. In terms of earnings per share or EPS, projections show 98 cents per share this year, growing to $6.66 per share by 2029. If we apply a PE ratio of 15, that would imply a $100 stock price, which represents around 193% upside from current levels. So according to analysts, Southwest could offer massive potential returns. Then, in order to calculate the intrinsic value of the company, I use my Google Sheet. This tells me at what price you should buy a stock based on the assumptions about the future of the company that you put in. I did a 7-year analysis with low, middle, and high assumptions. And as you can see, the intrinsic value according to my low assumptions is $20 per share, middle $38, and high $62. This also means that if my low assumptions occur and you buy the stock today at $33 per share, you would get a 1% annual return on your money, middle 13%, and high 22.5%. And I believe my assumptions are conservative. I have Southwest growing revenue between 3.5% and 5.5% over the next 7 years, averaging a profit margin and free cash flow margin between 3 and 7%. And I assign the PM price to free cash flow at the end of the 7 years of 14, 16, and 18. But if you want to make your own assumptions, I'm going to leave a link to the spreadsheet down below. It is super simple to use because I've done all the calculations in the background, so you only need to input your assumptions. Moreover, they have an okay balance sheet with $3.8 billion in cash and $5.3 in debt, which is not a lot for a company that has a market cap of $17 billion. In conclusion, I believe Southwest Airlines has the potential to deliver strong returns over the next few years, but only if the company manages to recover its profitability. For that reason, if the stock drops after earnings, I'll be looking to buy the dip and start building a position under $20 per share. Lastly, if you want a discount on stockanalysis.com, the best site I've found for stock data, grab my code in the description. I hope you found this video valuable. Let me know what you think about Southwest Airlines stock in the comments, and I'll see you in the next one.